Good day. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, the 13th of March, 2019. We're about 4:35 p.m. Central Daylight Time. Big rally day in metals, especially the gold. You know, it gained on the silver, it gained on everything else. And part of that was that the dollar continued to make new lows right into the close of the day. A wild stock market. As you know by now, the 737 MAX 8 fleet of Boeing planes has been grounded in the U.S. You know, the rest of the world was doing it. They just couldn't sit by. Apparently, the president put pressure on everyone, and that part got done. The interesting thing is the stock market had fallen down back to unchanged on the day, and these highs you're seeing were made late in the day. I mean, really a dramatic reversal. Brexit, well, they're going to vote tomorrow to see if they're going to do an extension, and then they have to convince the European Union for it. How long an extension, what this all means. Well, if you take a look at the British pound, up fairly strong, and this market got as high as 133.85. So this market rallied very sharply as the vote happened late in the day. So let's take a look at gold. And if you look at the weekly area chart of closes, you're keeping an upside bias. By that I mean the market is not challenging the 18-week moving average of closes. I consider the bias up whenever the market is over an 18-week average of closes on a weekly chart, obviously. I consider it on daily charts. If you're over that number, the bias is up as well. So I look at the 18-day average. When we look at this pattern here, you can see that you came down from this 1350 area right into the 1280s, and now you're getting a bounce. So you can measure from high to low, and you probably got about a third of the way retracement going right now. You're looking at a market that's got higher lows, higher highs. That's friendly, the market. I'll call that an uptrend. Where do you think resistance is? Look where the market went to today. Look at that 18-week average of closes. So often, when you got up to these highs, you fell back there, you pause a bit, then the market decided a downtrend. Now the market's coming up to the 18-day average. It has to decide what to do. Where the traction was felt on the break was from the lower Bollinger Band. Yes, you got under it slightly right through here these 3 days, and then you came roaring back the other way. Momentum on the bear side of this market was lost. You can see right here, yesterday, you lost the embedded reading. When that happens, often price and the 18-day average make a run at each other. The word is not always. I'm going to say that over and over. And the reason was, if it was always that way, you wouldn't be seeing me. It'd be the greatest trading tool in the world. But it's often. And take a look. I don't care if it hits it or not. It's right. It's done what I said. Often it makes a run at that number, and that's what's going on. As you take a look at GLD, you never did quite get the embedded reading. You need to get 3 days. I think maybe you didn't. 3 days under 20 in a row. It did have it. 1, 2, 3. When you lose the reading, this was Friday, 4 days in a row. Lost it yesterday. When that occurs, often price will make a run at the 18-day average of closes. There you go again. The market that's the strongest of the group has been the miners. That has had the higher lows, higher highs, and it's been over this 18-day average. The next target, if it can maintain this momentum and it's not overbought, could be the 23.49 level, where it has failed before, the upper Bollinger Bands. The gold-silver ratio, I would have liked to have seen this ratio get under this 18-week average. Now, in all fairness, I've changed the ratio a bit. I've now put up June gold versus May silver. And that's because here we are, you're going to be out of the April soon enough. A lot of people are moving already for longer-term trades to the June. When I look at the May silver right here, you've got higher lows, higher highs. You know what I'm going to say. I'm going to expect to see some early resistance at the 18-day average of closes. The market did have an embedded reading. So let's take a look. Both numbers not under 20. Here they're both under 20, both under 20, both under 20, both under 20, both under 20. So you had number of days when you lose that reading, and you lost the reading on Tuesday. Prices often, that's my theory at least, make a run to the 18-day average of closes. Getting pretty close to it. In the copper market, you have a lower low, higher high. What's caught copper right now is the president of the U.S. keeps saying he's in no hurry to do a deal with China if the deal isn't right. And while the market thinks the deal's going to be made, they don't have a deal on the table, so we're churning against this 18-day average without a trend, letting the Bollinger Bands narrow in. I think most of us expect the deal. Politically, it's the right thing. We're hoping it happens, but it hasn't happened. Keep that in the back of your mind. Obviously, if one weren't to happen, what would the stock market do? You got to ask yourself on that one. In the platinum, you have a lower low, higher high. This is a very difficult trade because the market went to a vertical decline and it can come back vertically. There's no way to catch this. How do you catch the knife? What do? Are you buying it, selling it? You're trying to be a hero over the 18-day average? No, and then you're not buying it under it. It's really not giving chart patterns. The market that's held up better than most has been the Palladium. It's not as stellar as it was when it just kept bumping up against the upper band, but it certainly has a pattern of a lower low. Today was a higher high. I would expect resistance right here at the upper Bollinger Band. Momentum is flattened out. Support has shown itself repeatedly at the 18-day average of closes, but it has gone into a pause. The big run-up that it had before, that seems to be behind it. In other words, now it's got headwinds more than it has the tailwinds, and I'd expect to see some resistance there. In the dollar index, look at this plunge. I mean, this market attempted a breakout right here. And the key is, can it hold it? It failed on this day, and there's no way to know if it's going to come back right here. All I can tell you is it's overbought, hit its upside target, first challenge right here, closed over it, and that's not uncommon. And now you start pulling back, and the question is, how deep of a pullback will you get? The market yesterday and today goes right down here, settles through the 18-day average. I wouldn't be surprised to see it play around that number. It has layers of support right here at 96.10 to 95.69, but traders are going to question, was that it for the dollar with the Fed basically in a patient mode? And that's going to be something that everybody's looking at. And I say that because one of the trades of the year that people were touting in December was short the dollar. It surprised traders because it rallied dramatically from the lows of December all the way up to this high, and suddenly it's run out of steam again. You know, one of the things we like to do here at Linn is write about commodity markets, but we don't limit ourselves to just the metals. We cover all of this. And I think you'll find that between what I write, what they write, you can get a full package of at least analysis in the markets. And we're not talking just futures. We're talking the derivatives, the options. I will be covering, I didn't cover it today in my subscriber video, but I'll be covering ETFs again tomorrow. Tomorrow we have our live webinar, by the way. If you haven't gotten my invite, it means you're not getting it. You better consider calling our staff to get one because they're through being sent out. And how you get it is you call us at this number. You can also get our research by going to our website, signing up for our free offers there, and we'll get you onto the mailing list. Remember, the webinar is tomorrow at 12:30 p.m. See you then.